All right, what's up, everyone? This is Ryan here from Crypto Grinders, and today we have Miko Matsumura, ICO advisor, investor, speaker, founder of Evercoin Exchange, and of course, Pantera Capital Limited partner. Miko, thank you so much for joining us on the show. I think today's episode is going to be one of those power pack episodes because, everyone is interested in investing in cryptocurrencies. Everyone just loves investing in ICOs, and you know what? We were looking for the right speaker to bring on this show, especially, you are someone who is an investor in the space. You have 25 years in Silicon Valley. I think you are also an advisor to multiple projects. I mean, definitely we are going to have a power pack episode to learn from you today. So, but before we go into that, who is Miko Matsumura? And, other than the ICO advisor, the investor, the entrepreneur, the speaker, is there another side to Miko that the public doesn't know about?
Of course, there always is. There's always more to the story. So, a bunch of things. I've been working on open source software since Java. So, I actually was part of the early Java team at Sun Microsystems. And, part of my whole mindset around this phenomenon is open source, right? So really, to me, the whole phenomenon can be described as open source money. That's my mindset. And so that's a big part of, my life. I think, the other thing that I think is probably noteworthy is, I've been around the block. I registered the domain Miko.com in like 1992. And, I was in the first internet wave. And, I feel like this wave is really much, much bigger. So that's my mood and mindset.
And so, okay, so basically basic questions, right? When did you invest in Bitcoin?
So I'm not a Bitcoin first generation old timer. I think it was probably 4 years ago. I saw a Bitcoin checkout in a cafe, in the Coupa Cafe in Palo Alto, and so I tried mining.
Okay.
And this is about 4 years ago, so it must have been like 2013 or something like that. But I have to say, like, I failed. Like, what I mean by I failed is that I tried mining at home. I didn't think I was getting very many coins, and so I just stopped. And I
So
pretty much,
how many was not very many?
I don't even remember, but I think what I can tell you is it wasn't enough to get my goal. And this is a very sad goal, which is my sad goal was I wanted to go to the cafe and I wanted to buy a cup of tea. That was my goal. And
Okay.
and if you think about how smart that goal is today, it's not a very smart goal because obviously, the price of tea then was probably pretty expensive compared to today. But what I do remember is I remember not really being able to generate enough coins to buy a cup of tea, and so I gave up.
Oh man, so basically you stopped the whole mining thing.
I did,
right?
I did, and then the other thing. So really, I consider myself to be a latecomer into this phenomenon in the sense that I really started moving my own investments in earlier this year in 2017. So really, kind of the beginning of 2017, also consider myself to be incredibly lucky. Ether was at like $13. Bitcoin was, I think it was in the hundreds of dollars or something. So it was really still a super lucky time to get in, especially when you think about the history of the price of Bitcoin and you just look at what it did, right? It went up and then it went back down and then it stayed down for a really long time. And it really didn't run up until earlier this year anyway. So, incredibly lucky individual, and I think I've got, good friends and an open mind. And I think those things help too. But, luck is always, you can't really time a market. So, I feel lucky in that respect.
Right. So basically, I'm hearing that you did try out mining 4 years ago. Then after that, you kind of set it aside. You just basically didn't really consider it. So where are the coins now? I mean, what happened to them? Like, because it didn't hit your goal doesn't mean that you didn't have any, right? So
I did have, but it's so funny because
is it embarrassing? You seem embarrassed. Like you probably had a decent amount.
It's what's funny is I don't even remember.
I will spare you the embarrassment. How much was the cup of tea? How much?
I don't even remember. But it's funny, right? I mean, it wasn't like the 10,000 Bitcoins,
the
Papa
pizza,
John's
right?
pizza. Yeah, okay. It wasn't like that. It wasn't like super crazy. It was
okay.
actually like a reasonable price. So,
okay.
I definitely not bitterly regretting anything.
This will be, I mean, you probably wouldn't want people to write about Miko Matsumura, the guy who spent, an X amount of Bitcoin on tea, right?
Yeah.
There'll be a nice opener actually if you did. You know what I mean?
Yeah,
I spent the most expensivest tea, right, 4 years ago, and that particular cup of tea will be worth maybe like say, 400,000 or something like that. I'm very sure. Based on the current price of Bitcoin at the moment, everyone's going insane. Okay, so now let's go into the real sweet things, right?
Yes.
So
yes.
I think recently you were featured by Business Insider, right? Not too long ago. And, they were asking you about the whole ICO industry. Now, I think being that you are someone who has already invested in startups and open source, companies before. So I am definitely certain that there has to be a valuation model that you would look at. So, I think I'm not sure how much you can reveal, but it would be really helpful to help us folks, right, who are just looking at the white paper. It may be a pile of shit, and we wouldn't even know, right? So I would hope, right, that this question, you could help us out in terms of how do you look at projects and what would make you invest? For example, you invested in Pundi X, you invested in Civic. You have quite a number of projects that you're also at the moment helping out in terms of advisory for Naga Group, Celsius, and Wala. What makes you even look at these projects to begin with? And of course, I do know that you look through a lot of white papers. And I'm sure that you probably get a lot of PMs on LinkedIn, like, hey, Miko, could you look at my white paper? Like, the moment you have blockchain investor,
So
they'll
much.
be like, and to be honest, I mean, you were also very lucky, because Zach was very honest. He said that he PM'd you on LinkedIn and you looked at his paper and he was like, so, please share with us, like, what would catch your interest? Okay, I'm sorry if you're going to get another 100 LinkedIn PMs, but, I'm sorry. But I think, we all are dying to know, as, someone like myself, I'm also very interested to invest in the space. I believe there are solid projects out there, but there are going to be 90% are going to be shit projects as well. So let's get into it, please.
So famous investor, Peter Thiel, who invested early in Facebook. I think he put $500,000 into Facebook at the very beginning.
Sure.
So he did very well. He has this book called 0 to 1, and I recommend people read it. And in his book, he talks about the two kinds of people. He says that there's a person who knows what they're doing, right? So the person that knows what they're doing is the scarcity. And so he says it's a scarcity because, so I think in his mind, when he thinks about the person who knows what they're doing, he's really thinking about Steve Jobs, or he's thinking about Elon Musk, or he's thinking about, particularly Mark Zuckerberg, I think in his case, right? So the thing that's interesting is he says all the other people diversify, right? Diversify. So what he's really saying is he's saying, like, you really have to just spread out your risk. And the reason why you have to do that is because you don't know what you're doing. Right.
Okay.
So if you use the title of investor, in a sense, it has to be an admission that you don't know what you're doing. Right.
Okay.
The definition of an investor is someone who doesn't know what they're doing. The reason why is that if they knew what they were doing, they would just do it, right?
Fair.
So, if you know the perfect thing to do, you should just go do that, and you'll be Mark Zuckerberg, or you'll be, Bill Gates, or whoever you'll be the next whoever, right? So the point that I'm making though is that actually it's important to not think of it so binary. So his book is called 0 to 1. So to me, I don't think of it as 0 to 1. I actually think of it as the real number system, right? It's almost like Satoshi's. There's like 18 decimal points, right? So what I mean by that is, what do you do? So diversify, what does diversify mean? Like if you don't know anything, then you basically just diversify across everything like a maniac, right? But we don't know everything, but we also don't know nothing, right? We know something. So the question is, what do we know? So the way that I like to invest is I'm a thesis investor. So what I mean by a thesis investor is, I really think about what I believe fundamentally, right? And so to me, there's two things that I believe fundamentally. One thing that I believe is I believe that what we're seeing in open source money or cryptocurrency is I think we are seeing something that is a huge global phenomenon. And if you read, this morning I posted on my blog, it's blog at blog.evercoin.com. I posted this idea of Bitcoin is our Brexit. So what does that mean? It really means that Brexit and kind of the Trump administration are fueled by disenchantment with central banking and with government fiat currencies, and people are trying to find alternatives. So if you believe this, what I think we're looking at is a global class reserve currency. And if you do see a global class reserve currency, right now Bitcoin is, I think, in the top 25 circulating currencies, which is pretty amazing. But if you actually go into the currencies that are not in circulation, that are in reserve, the value of a reserve currency is like tens of trillions, right? So gold, for example, is 7.9 trillion. The number of US dollars in reserve, massive, many trillions. So the point that I'm trying to make is my original investment thesis around Bitcoin in the first place was that there's a 1% chance that we're seeing a reserve currency. So if that's true, it means that the price could go up by 100x, right? So the point would be, what is the hedge? So the hedge is that you put 1% of your investable net worth in. So coming back to your original question of ICO, like, what is my thesis? So my thesis is as follows, which is that I believe we're experiencing something that's akin to what's called the Cambrian explosion in evolutionary history. And what that means is the Cambrian explosion was the discovery, you can call it a discovery or the invention of multicellular life on Earth. So if you look at evolution, there's this piece of rock called the Burgess Shale. It's a rock that contains fossils. And during the Cambrian explosion, it contains every possible combination of life form, every possible shape. And the bottom line is 99% of those forms went extinct, right? They went extinct. So the point that I'm making is right now, it's incredibly creative in ICO, right? And it's incredibly creative. We've pushed as an industry about $3.8 billion into ICO. Mm-hmm. And every single possible combination of things is being explored. And, it's my thesis that a vast number of these experiments will fail, right? Now, here's the thing is, how do things fail? They don't all necessarily go to zero. One thing that I think we will see is a bunch of things like mergers. Well, we'll see, coins that aren't doing well swallowed up by coins that are doing better. And so we're going to eventually see market organization. But I guess I wanted to say, in terms of thesis, the thing that is really interesting from if you look at it from a venture capital perspective. So I've been involved in venture capital for many years, at least 20 years. And in the venture business, in Peter Thiel's book, he talks about what he calls the power law of venture returns. And the power law of venture returns is that the largest holding in a venture portfolio returns more than all the other returns put together, right? So that's part of the mindset. So to me, what you should expect is you should expect that you can place like 20 bets and that, you know, one of those is going to do like, you know, so here's an example. So recently, like pot coins, like the marijuana industry coins, you know, those went up by like 30 to 40x, right? So that's crazy, right? Monero is trading at something like 250 USD.
That's right.
So privacy coins are going bananas, right? And so the thing that's very interesting is that, you know, at the moment, the industry is really figuring out killer applications, and it's figuring out what is going to really work and function and run. And at the moment, it's trying a lot of things because it doesn't really know. So to me, from a strategic perspective, you know, I tend to look at, you know, it's interesting. I mean, at the moment, one of my thesis points is this notion of, you know, utility token, which is, you know, really, I'm really interested in what is the primary cause for an end user to buy the token, you know, and so what I love is I love seeing people who are actually transacting in the economy. I mean, you know, the case of something like Pundi X, you know, I really like Pundi because it's real economy. It's point of sale, and people are buying cryptocurrencies, and they're also buying, you can buy a bag of rice or a loaf of bread at the store using cryptocurrency. The thing that's amazing is it's twofer, which is that not only do you get a pretty high transaction volume out of that when you open it up, but it also generates the next billion crypto wallets. Yep. Right. So, you know, with a billion more crypto wallets, we've entered what people call the Netscape moment. People are arguing right now that we're already in a Netscape moment with Coinbase, which is opening, I think, 100,000 new accounts per day.
Yeah,
so,
it's pretty insane. That's right. 100,000 a day. Yes.
And the thing that's amazing is I think the average account size is something like 30,000 USD. So they're not small accounts. You know, you know, it's a pretty sizable average, especially when you multiply the math. So, you know, that's a huge engine. But at the same time, the thing that it doesn't do is it doesn't touch the real economy. And so the thing with, you know, so mentioning Pundi X, you know, Pundi X has point of sale, which means that it enables crypto to enter the Keynesian accelerator in an economic model. I mean, I don't think we're all in crypto driven by Keynesian economics. We're more driven by Austrian economics, but, you know, which is Austrian economics basically says that there can't be a central controller, that the central controller is always going to be more confused than the market. Right, the market is always going to do a better job figuring out what things cost, right? So that's an Austrian model. But, you know, notwithstanding, the fact of the accelerator is real, which means that if people are touching the real economy with crypto, the crypto economy will grow and it will become much more stable. So, you know, I think that's the thing. The thing that I think is super salient for everybody is you should also learn about angel investing. So let me give you another resource, which is Jason Calacanis, who is a crypto skeptic.
Yeah.
Yes.
He is? I didn't know that Jason Calacanis is a crypto skeptic. I mean, he is. He's just an avid poker player, you know, and he sucks at playing poker, by the way. But you know what? He's just so fucking rich, you know, that at the end of the day, he can do whatever he wants. And I think that's the thing, right? Also, you're just like what you said, invest in 20, you just one or two. And I think he invested in Uber A or B shares. That's you know, one of his great tales when you watch
him. Oh, it's the earliest. He definitely came in at earliest into Uber. Right. I think he was at a event in the pier on San Francisco, and a bunch of companies pitched, and Uber was one of them, and he was like, "I'm in." But the thing that is amazing is read his book. So that's another book. If you like Peter Thiel's book, probably more practical is Jason Calacanis' book called Angel, and you will learn a lot. And so, you know, one, you know, I invested in Propy. And one of the things that I was doing is really coming from his playbook, which is you really actually care a lot about the entrepreneur, right?
Yes.
You know, that's a really big missing ingredient. I think a lot of people reading white papers and they're kind of thinking about grand ideas and thinking about token economics and thinking about all these kind of like, you know, bullet points and checkpoints and things like that. And what they're really not that focused on is they're really not that focused on. So to me, a couple things that savvy investors look for. One of them is product market fit, right? So to me, like product market fit is so critical because if you don't have product market fit, you are in a different world. And you're in a world where you're going to spend money erroneously. Like you're just going to spend money until you find product market fit or you die. Those are the two options, right? So you're just burning money until you either die or find product market fit.
Okay.
And
okay.
if you don't have product market fit, like you are in a weird place.
So now that you're mentioning this point, so before you go on to the next point, product market fit, which in terms of cryptocurrencies is that product market fit right now that you feel is essential? Right? Because I'm sure everything wants to be blockchain. Like today, I just got an email that it's going to be on beer. Okay. Then next time there's going to be something on chicken rice, blockchain and whatnot. Okay. So I just want to know, and I want to hear from you. Essentially, I see exchanges, I see smart contract platforms, what payment channels, wallets and whatnot. So what's that key ingredient that essential right now?
Hey, so before we go on to that, can you send me the chicken rice?
No, I have the beer. I'm just.
I love chicken rice, so I wanna invest in that one. So just send me that one. That's good.
If really that was to be decentralized, I would invest in it because that is
decentralized chicken rice. That's good.
I am really very curious if that happens, but I'll send it to you if that really comes up, man.
I'm just teasing. Actually,
I know, man.
Americans eat 9 billion chickens a year. I don't know if you knew that, but anyhow, but let's get off of chickens for a moment.
Okay.
And
yes.
And you know, so to me, like, there's two major classes of cryptocurrency investment, and I would say one of them is what I would call financial infrastructure. Financial infrastructure. And when I think about financial infrastructure, I'm really talking about to me, there's a handful of tokens that are what I call Bitcoin contenders, right? So if you go to CoinMarketCap, you can actually see that Bitcoin, you can actually see an index at the very top of the screen called Bitcoin dominance. And Bitcoin dominance tends to hover around like 55%, and it kind of like moves up and down. And it's how big Bitcoin is compared to everybody else. And if you think about the power law of venture returns, I think if you look at the power law distribution, you should expect mathematically that Bitcoin should be about 51% of all of cryptocurrency, right? So to me, that is the Iron Throne, right? That is in the Game of Thrones, Bitcoin is sitting on the Iron Throne of Westeros. And everybody wants to kill Bitcoin, right? So there's certain blockchains whose mission in life is to basically kill Bitcoin and seize the Iron Throne of Westeros and dominate, right? So that's a class of thing, right? That's a class of thing, which is I want to kill Bitcoin, right? So if you look at certain platforms, and honestly, the thing that I think Rootstock launched today, and they're adding smart contracts to Bitcoin. Right, which is really interesting. So now Bitcoin is kind of trying to pull an Ether, but Ether is kind of also maybe trying to pull a Bitcoin in the sense of it could be like a universal currency that could become, there's the flippening, right? Which is, you could flip in and we could see Ether take over. But the thing that I think, so just to make it a long story short, when I talk about financial infrastructure, there are Bitcoin contenders. So that's a small number of tokens. Right. And then there are what I call financial infrastructure utilities. So, for example, all privacy tokens are financial infrastructure utility. Right. Another class of financial infrastructure utility are kind of the class of like enterprise blockchain, you could look at Ripple or you could look at Kamsa So you could look at these kind of tokens as being essentially financial utilities. You could look at something like Stellar as being a remittance token, that's optimized for international money transfer application. And I think, to me, when I talk about financial infrastructure utilities, I don't think these chains are trying to kill Bitcoin. Like, I don't think they're trying to be the granddaddy store of value for all crypto. I think they're just trying to be useful.
Yep.
And I think, for example, payments, like Bitcoin is not awesome at payments, and why should it be, right? And it doesn't have to be in order to be successful, right? Bitcoin's Bitcoin, and we're all happy. So to me, all of those tokens are meaningful and valuable, right? But if you really want to come down the tree and play where there's a lot of growth, right? Because, if you invest in a Bitcoin, you may not see 30x or 50x or 100x. So if you want to go down into the area of growth, you might want to take a look at kind of the classical sort of utility tokens. And that's where you start to really see this concept of product market fit that matters, right? Which is that, you're looking at things. And for example, like I like conversion. So for example, Playkey is a good example. I advised Playkey, and they finished their ICO. They raised about 10.5 million, not huge, but that coin is based on a pre-existing product that users already pay fiat currency to use. And so, that is something that already has product market fit. And the question becomes, can you convert that into a tokenized economy? So, to me, I tend to like that kind of thing. But if you study like, Jason Calacanis's book, the thing that you can end up doing in some cases is you can end up in some cases basically throwing out the book and just investing in a founder, right?
Okay,
and
sure.
that kind of approach tends to work best pre-product market fit, right? So if you're going really early, you really have to. So to me, product market fit.
What would you look?
binary.
What would you look for in terms of the entrepreneur?
Yeah,
I mean,
so
like for example, what are you looking for? Like before the product is even created, right? I'm sure you have certain characteristics that you like in a leader, or at least certain management types in a leader that okay, this is the guy I'm going to put my money on. It's like betting on a horse, right? Even before the horse even runs out from the stadium, right? You have to make a bet. Right.
So here's the fascinating thing, right? The fascinating thing is that there are definitely intangibles here. There's intangibles, right? And the reason why I say it's intangibles is that, like, for example, if you look at Celsius, right? I'm advising Celsius. The leader there is Alex Mashinsky. He was part of the voice over IP wave in the first internet. He's raised, I think, about $1 billion in capital over 7 startups. And he's exited about $3 billion worth of value out of raising. So to me, like, he's definitely the type of person who's kind of deeply proven, and I think knows how to create value in fast-growing economies. So I think, to me, like, that's an example of someone who I think is very credible and believable as an entrepreneur. But the thing that I don't want you to get the impression of is I don't want you to get the impression that a person has to have only those qualities of experience. Sometimes it's a quality that's intangible, like personality qualities. Like, for example, the CEO of Propy is someone who just has an incredible work ethic and has drive and has a lot of passion. And so, I'm not advising, but I did invest in their token. And, I think to me, I looked at that founder and said, okay, well, this is a person who's got a lot of guts and will make things work, and is hardworking. So I think that's a characteristic. So I look at, people across the spectrum. I don't need experience. I really am looking. But the other thing that I think is an important quality is this kind of eat the world mindset. I feel like that's a very important mindset, which is, if you're expecting these things to achieve a lot, then, because really when you look at the power law distribution, you're really looking for, unicorns, right? And so, in a sense, it's hard for unambitious people to achieve that level of success, right? It has to be someone who's really kind of driven and passionate. So I look for that kind of characteristic as well. And again, just to be clear, it's an inexact science, right? So
yeah, it's also your intuition of the person as well, right?
Big
After interacting with the person, like, okay, personally, not saying anything, but when I met Zach, right, for the very first time, I just felt that this guy was a go-getter. Okay, personally, he's a go-getter. He's hardworking. He's extremely intelligent. Even before I mean, I did see the product demo and whatnot, but it was because of his kind of hardworking character, and also he's just there to learn, despite the fact that he holds the role of a CEO in Pundi X. That really made me admire him and want to go all out to help him help him in terms of the community and help him build the business as well. So that's when I decided to invest in with Pundi X as well. So, and I also saw for the product, which you mentioned earlier, which is the Fit, right? And it's the exact thing we need right now, because a lot of people may not be savvy enough to go and do all the KYC. Like my dad, will never buy Bitcoin because he will never have to go through that KYC thing. There's no shop that you could go in Singapore and say, hey, here's this cash, young man. Could you help me buy some Bitcoin? They don't have that. But when I saw Pundi X, I realized, shit, this is what we fucking need. And that is when I realized that this is something that I want to get involved in, even though the concept is very simple. I mean, POS is, a POS, but for the fact that it helps bring the whole cryptocurrency space and the traditional world together gets me very excited. So enough of Zach. Let's look at the let's look at the fact that I want to ask you another thing with regards to advisors. Right, we have this impression, okay, just the talk on the ground, Miko, that whenever we see the very popular, guys, the usual, they don't do anything in terms of advisory. They're just there to lend the picture. Is that entirely true? Because when we see a prominent name there, I'm not sure to what capacity does that advisor, or, backers are backers, but advisors, how much do they actually do in terms of a project? Let's say maybe we speak for yourself. How much do you contribute?
So I'm happy to speak for myself. So
sure.
To be like very, very transparent, like to me, my bandwidth is limited. So I think the thing that happens is that, because of the kind of power law distribution, it is kind of necessary for me to diversify. And so what that means is most advisors are running multiple advisory things at the same time, right?
That's
so
right.
the thing that is really important is kind of chemistry in some ways. And the reason why I think that's very important is that it turns out that my limiting it's not really my time that's actually the limit. It's actually my enthusiasm.
Mm-hmm.
And that, to me, I have unlimited time if I have enthusiasm. And so the thing that I think is important, though, is, I've definitely helped organizations make really decisive decisions, and I've given them really important feedback. So to me, like, part of it is, and also kind of important connections at the right time, things of that nature. So I guess to me, the thing about advisory is that, there is a relationship that is developed. A lot of it is gated on kind of enthusiasm. And, in a way, if you have advisors, you can get a lot more out of them if you can get them excited about your project, because you have to understand that they're doing a lot of other projects and a lot of things, right? And the thing that can happen chemically too, is that, oftentimes the CEO themselves will be insanely busy during an ICO. And so what you have is a kind of a bad combination of an insanely busy CEO and an insanely busy advisor, and the result can be that there's not enough strategic interaction, right? Now, when both parties do kind of finally land, or if they have, if they're at a conference together or something like that, then magic can happen, right? So to me, from my perspective, I think I focus my advisory on actual advice. So what I mean by that is that, I've seen a lot of patterns and a lot of deals, and I've seen a lot of investors, and I've co-invested a lot. And so because of all of those things, I kind of feel like, it's asymmetric. And what I mean by that is most ICO people are launching ICOs for the first time. Very few launching them many times, but most investors have invested already many times. Even in the short time of the ICO market, most investors have invested multiple times, right? And so because of that, and I think a lot of ICO launchers are also investors, but to make a long story short, people make mistakes. And I think that's probably the biggest thing, is to make sure people don't make irreversible mistakes, whether it be regulatory or whether it be in terms of structuring their token sale, proper and improper incentivization, thinking about post-ICO properly. People aren't thinking about post-ICO very well. Dealing with token economics, with behavioral economics, dealing with issues like product market fit, for example, even dealing with simple things like hiring, executive management, executive recruiting, all of these types of things, planning. Those are all pretty interesting. And, obviously, I think the governance aspect is something as well that I'm pretty deeply involved in.
Now that you mentioned, there was a point in this answer where you commented that you're also into regulatory, which leads me to Civic, right?
Okay.
So do you know Vinny before you invested in Civic, or basically, you only knew Vinny when you started to connect with the Civic project? So tell us a little bit more about Civic and what made you also look into it. I mean, I think from a product fit perspective, that is definitely essential, right? And it's necessary. But what else did you like about the Civic project that made you invest in it?
Well, I think I didn't have any relationship with Vinny prior to that. And, to me, I did see an entrepreneur with a proven track record and history and, Bitcoin Foundation and lots of really great kind of background. If you look at the model, one of the things that I thought was extremely powerful was the way that they were executing their token sale. So it was a beautifully executed token sale. I love the kind of model, 1/3 company, 1/3 ecosystem, right? So to me, like the concept, and 1/3 obviously sold to everyone. And so the concept of having 1/3 ecosystem tokens, still to this day, a terrific structure, and, something that helps them, execute their agenda and acquire more and more users into their product.
Mm-hmm. And from this standpoint, do you find that Civic? Do you find that they are one of the leaders in this space, or where do you feel that they could further improve at the moment?
I think, to me, it is more. It's not about Civic necessarily improving per se. I think it's really about maturation of the entire ecosystem, right? Which is that I do think that having stable concept of identity, they already have like KYC AML within Civic, which I think is great. So they've added some really powerful functions. In terms of ecosystem, there's functions like like Uport has this kind of concept of reputation. So I think, to me, the identity providers don't have to provide much more than an identity, as well as a platform for associating metadata in other chains. Because I think what should emerge is a whole ecosystem based on, blockchain-based identity plus, and, I think the notion that there will be a singular identity service, I think there will be multiple identity services. So, in terms of like the ecosystem, it's great that they're there. It's great that they're early. And it's also great that they're doing such a good job with customer acquisition and ecosystem tokens. So, I definitely like Civic, and I think it's part of the infrastructure of the future of blockchain.
And so far, I think I want to ask, everyone will probably be asking, right? What other projects are you looking at the moment? Like, you have not put your money down, but it has caught or piqued your interest.
Well,
is that convenient to say?
Well, I think it's very important for me to kind of talk about, kind of the really important, advisory companies that I'm working with. So I'm working with
Sure,
a number
please.
of additional ones. I'm working on Walla, which
yes.
is an African crypto banking solution, and I really, really admire the founder. I think the team is excellent. Vinny's VC, Newtown Capital out of South Africa, is invested in Walla as an equity investor. And they have about 1 million users in their online community. So, I think they're really doing a great job there. Another one that I'm excited about is CG Blockchain, and CG stands for Compliance Guard. And CG Blockchain actually has they have this amazing hedge fund compliance product. And I know it sounds kind of boring, but the thing that's amazing about the product is that it means that they have pre-existing relationships with hundreds and hundreds of hedge funds, right? And they're not even crypto hedge funds. They're like real world hedge funds. And in a sense, they're introducing blockchain technologies into hedge funds, and I think that's a class of capital that represents trillions of dollars of capital. So CG Blockchain, amazing and pre-existing product. Another one I'm excited about is WorkCoin.
Okay.
And so I've known the founder and entrepreneur of WorkCoin, Fred Krueger, for probably more than 20 years. And he's built a real working product that is essentially a decentralized like Upwork or Fiverr, right? It's basically a decentralized version that solves actually fundamental problems with that entire model, which is that in that model, the network takes so many fees that they have to keep the suppliers anonymous, right? And because they don't want the supplier to form a direct relationship with the consumer and then bypass the fees, right? And so the whole thing is broken. Like that's a broken model, right? Where the network takes fees and then they have to keep the users anonymous and the work gets done. What it means is that the work has to be cheap and commodity work that anyone can do, right? So it's an ocean of providers, right? So to me, the whole model is broken and it doesn't scale. So WorkCoin is fixing that. I think that's exciting. And I'm working on 2 projects that I think are also very exciting, which are publicly traded companies that are interested in this space. So, one of them, it's a little early to talk about, but the one that's actually currently in public sale is Naga Group. So I'm excited about Naga Group because they are one of the early public companies that is listing a token, and they're building, essentially what I call a hybrid, which is they're creating a hybrid between public equities and cryptocurrency, not just in their app, because they have an app and the app is going to be able to buy and sell cryptocurrencies. It's going to be able to buy and sell public stock trading, but and virtual goods. So it hybridizes all those things.
That's pretty ambitious, isn't it? You're
it's
launching an IPO and you're doing an ICO. Wow.
That's correct. That's correct. So they're creating a hybrid, right? So not only are they creating a hybrid for their users in terms of their app, but they're creating a hybrid company, which is kind of half crypto, half public equity, right? So, it's a really amazing world that we're coming into.
How much are they planning to raise for IPO?
So the goal is 30 million. So, I think they've raised like 15 and they're still going. So
nice.
It's exciting.
And do you have any comments about, because we are pretty big on Kyber and Omise Go, right? So I mean, look, Kyber and Omise Go, they already have a pre-existing client database from Japan and Thailand, right? Even before which is under Omise, before they even decided to do an ICO on Omise Go, right? So I mean, these 2 projects, what are your thoughts? And just want to hear from you.
Yeah. So to me, like, I'm very bullish on exchange. And so, obviously I'm a co-founder at Evercoin exchange.
That's
and,
right.
And I love exchanges. I know that the Pantera partnership loves exchanges. Obviously, another one in that category is the 0x. And, so there's decentralized exchange. I don't think decentralized exchanges will get rid of centralized exchanges. I'll give you an example there's CBOE, the Chicago board, and then there's Chicago Mercantile Exchange, CME.
CME,
right? Yeah. And then now NASDAQ is actually getting into cryptocurrency exchange in terms
they
of
they better.
They're going to, right? And so here's the funny thing is those are centralized exchanges, right? Like there are traders that understand that the speed of light travels like 1 foot every nanosecond, right? And that the trading edge for them is to actually rent an office that's really close to NASDAQ, right? In order to get that amount of time, right? That small edge.
That edge, the high frequency trading edge.
Correct. But the point that I would make out of all of that is that it's not that decentralized exchange is going to wipe out centralized exchange. Like it cannot, like the speed of light is a constant, right? Like there's no weird magic that we can, like, it's not like open source developers are going to fix the speed of light so that we can have a global decentralized exchange that's as fast as a centralized exchange. It's like, no, like that isn't, the physics don't work, right? And the reason the physics don't work is that there are traders that want that much time advantage and they're going to use it. They're going to use that advantage, right? And so because of that, we're not going to be rid of centralized exchange.
For sure.
That being said, is there a bunch of users for a decentralized exchange? For sure, there are a bunch of users, right? And I think things like crypto libertarians and, there are lots of people that will continue to use, centralized and decentralized exchanges. Lots of the pre-existing exchanges actually may have to change. I mean, we have exchanges like, Coinbase, Pundi X, Bittrex. Those are all like radically centralized exchanges. And I think they may have to change at some point. But, but I think to me, I like it. I like Kyber, but I don't think there is people think there's going to be a last exchange and the last exchange is going to be decentralized. I think there may be a last kind of libertarian exchange, but if you really see like NASDAQ, I don't think NASDAQ will go away. I think they're going to exchange cryptos because they said they would. CBOE, I think they're going to exchange. Yeah, CBOE is going to exchange cryptos because they said they were going to. CME is going to trade cryptos because they said they were going to. So they're all going to do it, right? So I guess the point I would make is that the world of exchange is very, very big. In terms of Omise, I gotta say that they've had an amazing run. I think for the class of token that they're in, I think it's like a, borderline $1 billion coin market cap. It's south of that, but it's been an incredible run. And, to me, I like it. I like what they're doing. I feel like, there may be, I don't know that they have a huge amount of running room to continue, but I feel like at the current price point, they're incredibly well priced. I mean, it feels like they're pretty awesome. I mean, so if you're looking for a lot of growth, you might look elsewhere.
Right, got you. I hear you, man. Okay, so now with regards to regulatory, right, in terms of the whole ICO space, do you feel that at some point ICOs in general could be more compliant, or what do you feel that ICOs, like currently now, if you were to raise money, what does it actually need?
So I have a nonprofit called ICOgovernance.org, and it's the ICO Governance Foundation. And to me, the biggest thing that's missing in the industry is standard disclosures around ICOs. Right. And so I think there should be a standardized disclosure protocol, and so people should just explain. And to me, the biggest things that need to be explained are who's getting paid by whom, at what time, for what reason. Right. Like those are the things that matter the most, because if you can't explain that, then it really gets to be a little crazy. Right. Like, for example, recently the US SEC did an enforcement action on PlexCoin, right? And I encourage everyone doing an ICO to actually read the filing that the SEC produced, because it actually tells you a lot about their mindset and it tells you a lot about what not to do, and it's fascinating. The things not to do even apply to like general ICOs right now. Obviously, being a recidivist securities fraudster, right? So it's someone who's continuously keeps trying to defraud people. Like, that's obviously something you shouldn't do. But most people aren't trying to do that. But there are other things in that report that you should read that say things about the promises that they're making, right? They're making lots of promises. And I see the same people falling into that same trap. I see a lot of people making a lot of promises that actually get them into hot water with respect to shareholders and potentially defrauding shareholders, especially like guarantees of profits, right? I see a lot of people doing guaranteed profit, particularly in their discounting structure, right? So, you know, I got offered 100% discount on a token sale at a conference. And the thing that's funny about that is 100% discount means that you can buy infinity tokens for $0.
Yep.
Right. So
that's right.
That isn't even a thing. Right. So I guess the point I'm trying to make is, you know, you should be careful. The other thing that I think is bad about rampant high discounting is you're bribing people to dump, right? You're basically, if you give someone a 90% discount, their best move is to dump it the day that it comes out. Like,
that's
because
right.
even
that's what we see all the time, man. Like all the time, everyone's like waiting for it to list and then they dump it, right? So those high discounts it's really should not be. It's a bad practice, and I think too many people are doing it too much. Okay, so now this is a little bit more on the personal side, right? So you can choose not to answer it. I am sure that there are projects out there that you know are straight up failures, right? So you can choose. Look, if this was the what? Feel your guts or something like that, right? Which projects do you not feel will actually be successful in the next 2 to 3 years? Well, but are gaining huge traction.
Oh, wow. That's really scary. I should be careful, right? Because people are gonna get really angry if I like say the wrong things here. But you know, I'll tell you some. So I'll give you like really uneducated perspectives, right? So here, because I'll tell you what is the things that I haven't. So there's an infinite number of things that I haven't invested in, right? I mean, I won't say infinite, but there's a ridiculous number. And honestly, the amount of time I spend researching things that I don't invest in is super low. So I don't think I could honestly give you great answers, because to me, the one of the things that makes me mad is people who haven't researched anything at all about like Bitcoin saying like really bad things about Bitcoin, right? They're all like, oh, Bitcoin's a scam or whatever. It's like, did you read the white paper of Bitcoin? Like, did you spend any time like researching this opinion that you have? So, you know, I hate to be like, you know, too, you know, I don't want to mess up your show, but you know, I feel like
go.
No, I guess
I mess up my own show, man.
No, I mean, what I'm saying though is that like, you know, I feel like, you know, for me to criticize things that I haven't researched, like it's hard for me to do that.
It's a field. You know what I'm
saying? I'll tell you what is. I'll tell you in terms of my feel, like.
You're so nice, Miko. You're just beating around the bush.
I'll give you, but I gotta give you some raw meat since you're really like hungry for it. Like I'm not bullish on IOTA. Like I feel like that one is like sky high right now, and everybody's going bananas for it. And you know, and here's the thing is I'm very open to anyone educating me. So if someone wants to educate me about this and say, here's why you're wrong, I'm all ears, because but at a gut feel level, like I don't quite get it. Like I feel like IoT is something that like it's kind of an umbrella for a lot of things that are, you know, a bunch of restarts, and you know, and I feel like when you look at the crypto economics of it, it's hard to kind of understand how the math is going to work. But you know, people can say any bad thing about anything. So you know, I like I said, I continue to have an open mind. But if I'm going to like be skeptical about one of the major coins, that would be one that I would have skepticism for.
Right, for sure. All right. So that's all the time we have, Miko-san. Thank you so much for coming. I know I know you have a very, very tight schedule, and you made the effort today to just be on the show. So guys, thank you so much for joining us on the stream, and that's all the time that we have today. Thank you so much, Miko-san.
Thank you so much. Super fun show. I really appreciate it.
Really happy to have you here. Bye bye.
Okay, bye.